Morning, Alan. Welcome to our very first intelligence podcast by KPMG Kazakhstan. I'm very happy to have you with us. How are you today?
Morning, Mayor. Thank you. Thank you for invite me for the first event. So doing good. What about
Perfect.
you?
Perfect. I'm very happy to have you as director of our corporate tax department. Today, we're going to start with a very important topic for investors doing business in Kazakhstan, which is the 2026 new tax code. We've been hearing about it in last 2 years, and here we are, 2026, and it's finally here. So maybe we can start to talk about the vibe of this new tax code. What do you think is the rationale behind this new tax code? Is it the government's looking for increasing tax collection for real, or it's actually a real move to modernize the system?
It's a real good question, Mayor. Thank you. First of all, I want to say that we been waiting this tax code for more than 2.5 years.
Yes.
So 3 years ago, President Tokayev announced a new tax code, and the main target or main idea of this new tax code was reform tax administration,
Mm-hmm.
to move it to the digitalization,
Mm-hmm.
to reduce to minimum um cooperation, direct contact of tax inspector and taxpayers,
Mm.
reduce or prevent corruptional elements, etc.
Mm.
So the main target was this.
Mm.
But due to recent events,
Mm.
due to huge budget deficit, so we are seeing that all this reform strictly direct to increase revenue of budget. So that's it that we are
Mm.
facing right
Yes.
now.
Also, we heard that government calls this a service-oriented model. As we know, for a business owner, for investors included, which used to difficult audits, what does service actually look like in 2026? What we are meaning is this is a service-oriented tax system. Does it really, how we interpret that?
I think it's an interpretation of government,
Yes.
but for businesses,
Mm-hmm.
it doesn't look like that.
Okay.
So,
Mm.
so business look at this new tax code that's
Mm.
all reform directed to increase
Mm.
budget revenue. So, um,
It seems like
the increase regulation, increase
right,
tax rates.
right.
So there canceled a lot of
Mm.
tax benefits for
Mhm.
taxpayers.
It seems like governments are requesting stronger capacity from the companies to be ready for this new tax system. Companies need to have stronger tax compliancy system, so the companies need to grow its own muscle ready for this new code. It seems the threshold for companies to operate will be higher, and investors need to get ready.
Sure,
Right?
sure.
So the standards is higher now for operating a
Right,
business in Kazakhstan.
right.
That's
And
for sure.
and possible mistakes in tax could be cost a lot.
Right. So that comes to the saying, right? Tax is very important to conduct business in Kazakhstan, especially
Sure,
in 2026.
sure.
I think that's the whole purpose why we are having this podcast is
Right.
to, for our audience, which mostly likely will be our investors, company owners, to really understand why we need to deeply be prepared for this tax code, isn't it? Right.
Right, sure.
So maybe we can just start by break down some details. We can discuss some real numbers. Maybe we talk about first the biggest change, which is VAT, right? It has jumped from 12% to 16%. So can we talk about that? How we view this big change, how it will impact, and what there are things company need to be prepared for this major VAT check change?
Sure. So VAT changed from 12 to 16.
Mm-hmm.
Initially, government planned to raise it to 18%, actually.
That's a lot, yeah.
That's a lot. And they talked that
Mhm.
this change in VAT uh, will not impact at business seriously, but it's actually impact to Kazakhstan economy.
Mm.
So inflation rate will raise.
Directly, right?
Yeah. So the prices for people also will raise. So I think the impact is huge.
Right, right.
Not, I agree with government that impact for business with respect to paying VAT to the budget. Yep, it's an indirect tax. It's not a huge impact to business, but it's a huge impact to country. So it's important change in
Right.
taxes.
So companies, when they prepare their cost projection or quotations, even including us, when we provide our own proposals, we always need to prepare our clients, say our price is exclusive of VAT now, and clients need to add up that fee. So for every service industrial, trading, import, export, also for VAT refunds, we all have seen in real business practice, we need to be aware what does it mean, this change of VAT for your own business, isn't it? Yeah.
Sure.
So about CIT then, let's go back, move to CIT. As we know, that standard rate is still 20%,
Right.
but some sector maybe is paying more. For instance, banks, we can elaborate that later, which go up to 25%, while agriculture is still 3%. What do you think this sector picking, what's the going to help the economic, or it can make things more confusing, or what this means that the governments are putting sectors into different CIT sectors? And what about the CIT incentives generally? Is there new impacts for CIT incentives from, for instance, Chinese investors? They mostly enjoy a lot of CIT because of this treaty. That's the second part of question. Does it impact the treaty of CIT as well?
There are a lot of changes in CIT rates,
Right.
as you
Let's talk
said.
about all
So
that. Yeah.
the first part, I think it's agriculture. Yeah,
Right.
governments reduced rates for agriculture,
Mm-hmm.
for some of businesses of agriculture from 10 to 3%, for others from 10 to 6%. And it's a good trend. It's a good
Right.
trend because we should be aware of our agriculture sector.
Right. Because
I think food will be important part of governments for countries in future.
another just a small cut. I saw that in GDP wise, agriculture is only a small portion, under
Right.
5%. But we are here on the ninth biggest land in the world with very
Exactly.
rich soil. But our
Exactly.
agriculture is not modernized, is not developed. So maybe the rationale behind is what you said, right? To
Right.
stimulate this business.
Sure. We should stimulate it. And we understand that there is a lot of corruptional elements in agriculture sector.
Right.
So it's a complex of problems that
Right.
government should
Exactly.
fix it up, etc. But for other changes, for increasing its banking. So I think government thinks that banks gain a lot of profit and increasing from 20 to 25%. It's some kind of fair rate for banks, for financial sector, because banks had a lot of tax benefits.
Right.
But from 2026, they're canceling these benefits too, government canceling it.
Right.
So what we are facing? We are facing that tax CIT rate for banks raising for 5%.
Right. So
Government canceling tax reliefs as mm, previously banks or other taxpayers, but mostly banks, could exempt its income from government bonds from CIT,
right.
and it was a huge part of its income.
Right.
But now um, we see that not only changes in 2026, but there is retroactive changes in 2025 for banks. Especially, I'm talking about additional CIT rate in 10% for income from deposits in national banks and government bonds. repo operation,
Mhm.
swap operation.
Mhm.
So there is additional
Mhm.
10% CIT
Mhm.
because government want to get more CIT from banks
Mhm.
in 2025 too,
Right.
not only in
There was an
2026.
attempt,
In
right?
in 2026 they raised the CIT rate, but in 2025
Mhm.
they was creative, so they announced this additional CIT
Mm.
10% rate. So
Mm.
I think that this changes for banking sector
Mm.
actually not so far fair as
Mm.
government thinks.
Mm.
So I think we will face some creative decisions from banking sector
Mhm.
how to uh, how to direct or how to manage
Mm.
its tax burden in
Right,
future.
right. If you look at the, let's say, economic structure, we talk about that agriculture relatively still small, right? Well, banking, we can see from CAS, from the index, from stock market, biggest market cap companies are all the banks. So it's
Right,
true, they are the key drivers of the economic here.
right.
And it is fair or not fair, but there's a certain contribution which government expect from the banking sector now to be the sector which will collect for their tax, to increase their tax in collection, isn't it? So that's quite interesting rationale behind. Now let's go back to something which will impact everyone, you and me include, our PIT, right?
Mm,
This is first time in history we jump from a flat PIT tax rate to this progressive scope of 10% and 15%. And what exactly, who here will hit that PIT 15%, and how PIT change will affect payroll for all these companies with high paid, especially for foreign companies, international staff, relatively high paid compared to other local payroll payers. What is the key angle here for us to understand the rationale, the impact, and how companies should look at this?
So I think it's a part of government strategy
Mm.
to introduce a luxury tax
Luxury tax,
in
yes,
Kazakhstan. It's
yes.
uh,
Mm,
it's a one of the part.
mm,
So it's a kind of progressive tax for
mm,
PAT. What
mhm,
does it mean? It
mm,
means that all employees um, that had a income about 30 million tenge per year
mm. 30
will
million
pay will
tenge, yeah.
pay will pay 10%.
Mm,
But employees with revenue higher than
mhm,
30 million will pay 15%,
mhm.
but only for that gap that
Ah,
is above of 30 millions.
right.
So the first 30 millions will be taxed at 10%,
Mhm,
and the rest of part will be
mm,
taxed at 15%. I think it's kind of fair, but
mhm,
on my view, this threshold should be
mm.
bigger than 30 million tenge.
Right. It's relatively small, or this threshold to be maybe more progressively break down to a smaller, maybe 10 to 12, 12 to 15, if because as we can see, the as the now the job markets, we can see that the salary threshold is increasing, right? So maybe this benchmarking of uh, the current threshold is low compared to, especially for media management, or
Right, right.
if you're talking about in the sector of
I,
banking,
s- I s- I
mining.
think
Yeah.
this part of luxury tax will impact a lot of people, a lot of employee in Kazakhstan.
Right, right.
So
Mm,
it
mm,
doesn't make sense if
mm.
we call it luxury tax.
Right. It's because I think we are very confident with the economic, and we look at other markets around us that the salary average fairness, if you're looking at China, or we are looking at Moscow, or
Sure.
Russian, we are looking at Middle East, this threshold is relatively low. Well, our GDP increase is increasing sooner or later. within 3-5 years, again, salary will increase for a certain percentage. Do you see this will be adjusted, or this will stay with us quite a long time? Do you see this threshold could be adjusted? Is there a agenda from government side? They will plan to adjust this threshold every 3 years, 5 years? That's what's happening with other country, for instance, from China. They do this relatively after
So this
collecting the
threshold
job market.
is directly connected with minimum monthly index.
I see. That's how we're connecting it. I
Yeah,
see. Mm-hmm.
and
Mm-hmm.
this threshold
Mm-hmm.
will be raised slowly, but I think if I hope that this threshold will be revised in future.
Mm-hmm.
So the other part of luxury tax
Mm-hmm.
does make sense
Mm-hmm.
because excise tax. So
Exercise tax. Okay.
it's really mean luxury tax. So for high cost cars, for yachts, expensive houses
Mm-hmm.
and other
Mm-hmm.
immovable property.
Mm-hmm.
So there will be additional
Mm-hmm.
excise tax.
I
So
see.
it's a strategy, government strategy to introduce
Mm.
luxury tax in Kazakhstan.
That's maybe step one. Later, they might grow some more sophisticated tax structure, like, for instance, also property tax may be introduced in the future
Oh,
if we talk about luxury.
right, right.
Mm.
So the first part it was a
Personal goods,
PIT. So
PIT.
second part was excise tax when we importing a high cost cars, when we
Right.
importing some ships, yachts, etc.
Luxury
And
goods.
if we own
Mhm.
expensive
Mm.
high cost property.
What about importing cars? This, for instance, Lixiang cars or from China, that will be collected. Before, already, governments are collecting such import tax, the excise tax, or now
So
they started?
it's starting from 2026.
Really?
So
Okay.
the price should be higher than Nissan. So it's really expensive cars. I think it's a luxury segment of Rolls Royce, Bentley, etc.
Porsche, all these cars.
Yeah,
But
yeah.
for,
It's more than $100,000.
okay, more than $100,000. But for cars, China EV cars, they should not be impacted.
Yeah, they
Okay.
should not be
Stay
impacted
as is.
because
Mm.
the prices
It's not
it's a
touching
very
that threshold.
competitive
Okay.
from Chinese
I see.
producers.
Good to know. So now maybe we can look at the sector impacts. We talk about banks, we talk about agriculture. Now there are very important sectors we know for our foreign investors, especially is subsoil, subsoil and oil and gas, right? So we know that if 70% of the export from Kazakhstan economic wise is always minings and related, what could be the foreigners subsoil tax impacts from 2026 under the new tax code? Can we start with that?
Yeah, so one of the main
Mm,
changes
mm,
in tax legislation for oil and gas
mm,
sector,
mhm,
it's a tax maneuver, so-called tax maneuver, when
mhm,
tax authorities will increase mineral extraction tax
mhm,
for crude oil
mhm,
starting from 2027.
mm,
They will cancel rental tax for crude oil,
mhm.
and they announced that they will plan to cancel uh, export duties for crude oil.
Okay.
But overall,
Mhm.
tax burden will raise for oil and gas sector.
Will it impact the confidence or the interest from the investors in this sector from now on, including
I
subsoil?
think there will not a huge impact for interest for oil and gas sector
Mm,
because oil and gas sector
mm,
historically a high profit sector,
mm,
high profit business.
mm,
So I think this tax maneuver
mhm,
could be fair,
mhm,
especially for young fields
mhm,
with a huge young fields that have
mhm,
a large oil reserves. So
mhm,
I think that maneuver will be fair from
mhm.
tax perspective.
What about the subsoil, which is separate sector compared to oil and gas, right? The mining, which will there any changes for that, for the mining sector?
For mining, I think it's government face some problems with
Mm.
mining because we don't look that government facing that we have no new fields
Mm.
of mining minerals in
Mhm.
Kazakhstan.
Mm.
They're all old.
Right.
So business don't want to
Mm.
explore
Mm.
these new fields
Because
because
exploration
it's
costs.
expensive and
Right.
because it's not fair from tax perspective. The business will face a huge expenses
Mm.
for exploring part, but
Mhm.
there
Mm.
there are no any tax relief, tax
Mm.
benefits with
Mm.
respect to this.
Mm.
So and it's not beneficial
Mhm.
for business
Mhm.
to deep dive in
Mm.
this exploration for
Mhm.
mining.
Mhm.
So, and I
Mhm.
think government should promote, should stimulate business to do that.
Right. Right.
And so
Mm.
we have some incentives. We
Mm.
have some
Mm.
incentives in tax code,
Mhm.
but we think
Mm. Mm.
it's not enough.
Mm. Right. Right. So if we are looking at, there's one topic I want to go back is for CIT. Is there incentives changes for tax code for this AIFC companies or CIT incentives for foreign investors?
Uh, sure. Could we step back
Mm.
for industries
Yeah,
if
sure,
we
sure,
talk? Yeah.
sure, sure. Mm.
So if we get step back for
Mm.
banking sector,
Right. We can step
so
back to, of
we
course.
had additional changes
Mm-hmm.
that but we have changes that CIT rate will raise to 25%,
Mm-hmm.
but
Mm-hmm.
there is still room for financing businesses.
Right, right.
So there's still
Loan
could
business.
loan business
Yes.
if they will
Mm.
finance real
Mm-hmm.
sector of business,
Mm-hmm.
so they could tax this income at old rate,
Mm-hmm.
20%
Mm-hmm.
CIT rate.
Mm-hmm.
But what does it mean?
Mm-hmm.
It means that banking sector
Mm-hmm.
should make a separate tax accounting,
Mm-hmm.
and it's really difficult
Mm-hmm.
to they should separate accounting for that type of incomes.
Mm-hmm.
They should make separate accounting for expenses,
Mm-hmm.
and so the tax accounting is being more difficult for tax department of
Mm-hmm.
banks.
Mm-hmm.
So the human factor
Mm-hmm.
and possibility to make some mistakes
Mm-hmm.
in tax accounting
Mm-hmm.
is raising.
Mm.
As we talked before, as we said
Mm.
that as for now, mistakes in tax could be cost a lot. So
Right. Right.
it's another one
Mm-hmm.
challenge for banking sector.
Pharma sector, we see a step up VAT 5% this year, 10% next year. Will this help keep the medicine price stable for the public?
Good question. So social question. They have so social impact because
Mm-hmm.
um, we never had VAT for medicines, so
Mm.
for medicine services, for medicine staffs, etc. Medicines will be more costly
Mm.
for people.
Mm.
So 5%
Mm.
VAT for 2026,
Mm-hmm.
10% VAT for 2027,
Mm-hmm.
and there is only one exemption:
Mm.
if business selling medicines to government.
Ah, I see. Okay. Mm.
All other cases there will
Mm.
be
Mm.
VAT.
Mm.
So all medicines for people
Mm.
will be prices will raise,
Mm-hmm.
will be higher. One of the worst changes in tax code, on my view,
Okay.
from people perspective,
Mm-hmm.
it will not impact state budget, but it's a really huge impact for the people.
Mm-hmm. Are there other sectors you think will be impacted, which we haven't touched on yet? But we talk about banks, we talk about agriculture, we talk about mining, the oil and the gas, we talk about pharma. I think that's pretty much the major changes which were in the 2026 tax code. And we
Right,
talk about
right.
CIT incentives is not really impacted. But
So
mm,
actually, it's impacted
mm,
because we have changes in that incentives
mm-hmm,
in tax and customs incentives.
mm-hmm,
So mostly there are changes in types of investment agreements.
mm.
that foreign investor could be pretended. They reduced the list of investment contracts.
Mhm.
They have clear list of investment contracts. It's a good part of our tax legislation that investor could enjoy some tax incentives. I mean, it's exemption from CIT, exemption from property tax, land tax, up to 10 years. Also, foreign investment could join some customs incentives. It's exemption from import duties, exemption from import VAT.
That's pretty much for our CIT impacts then, under the new tax code. Yeah.
So with the recent big changes in tax code and the future coming frequent changes, so I think that it's crucial for investors and businesses to understand how these changes will impact their operations, their business, and in this permanent tax legislation changes, business should be adopt all the time for this changing environment, tax environment. So it's really hard to do that alone for companies, for taxpayers, and I think that's why we are here. Something like must for businesses in this new reality, in permanent changes in tax legislation, aggressive approach of tax authorities. So taxpayers should understand all its tax risk, should understand how to mitigate it and how to defend its approach. So I think it's our mission of tax consultants or KPMG Kazakhstan, especially tax and legal department, to protect our clients and make our tax environment more attractive for investors.
Right. So this is the moment our clients will need us most for tax to mitigate the tax risk and to really adjust to this new tax regulation environment.
We should make our clients feel safe with respect to taxes when they're entering Kazakhstan, when they're bringing its businesses to Kazakhstan, etc.
What I would like to talk about how these changes affect day-to-day business operations. If we how the business and the investors could do in day-to-day business to prepare in real practice. If you have to talk to a CEO of a company to prepare to be ready for 2026, what would you suggest? What could be your suggestion for that?
I think business should eventually be prepared for that changes in 2025, and um,
So it's already too late. No,
it's
we're not talking about too
it's
late.
if we are talking about right now, it could be too late. We think that at least for last 10 years, our tax legislation was changed frequently. So we should be up to date all time, and it's really hard to business to be up to date, to have a high quality tax specialist, and in this new reality, having external consultants, external supporting, it's important. It's a must. I think it's a best practice. So
That's why we have our team, right? Supporting
right,
our
right,
clients.
right.
Your team must be
We,
super
we,
busy now.
yeah, we have in tax department more than 150 specialists, and at the beginning of 2026, we had a lot of projects.
Right.
So we're trying to protect our clients for that changes,
Right.
to prevent negative impact on our clients, etc. So I think
That's a very important.
business should think about tax burden. It's very important, and as for now, mistakes could be cost a lot, as we discussed it before.
Right.
Sure.
Right,
Mm.
exactly. Then what are the mistakes if we talk about the mistakes could be made? What are so far the common mistakes, or let's say not the trap, but the key area which you see companies fall into right now and during this transaction period? What could be if we name one or two common mistakes?
Actually, there are a lot of types of mistakes, but
Mm.
the main mistake to think that taxes is not important.
Right.
The taxes
Mindset.
will not affect our
Hmm.
business.
Hmm.
So that's a main mistake.
Right, right.
So and in that new reality, when the tax authorities had a more aggressive approach
Mm,
in camera control
mm,
in during tax audit, all business should be prepared
right.
for that new reality.
Right. That's why in KPMG Kazakhstan, in our tax department, we have so many different divisions to be prepared to prepare our clients. Right. We have for this transition. We have corporate tax, your team. We have international tax under our colleagues ASIA for tax structuring for capital in and out to be efficient, and we have also our um, tax compliance and bookkeeping team to really hold the hands of our clients to prepare for daily operation work. We also have our transaction price team, which
Transfer pricing team,
transferring
right?
price team to really prepare the clients to understand with, especially we see a lot of foreign clients like Chinese clients, which they have EPC business. They acquired for equipment import export with their related companies within China, which easily trigger TP.
Sure.
And we also have our custom team, which see a lot of tech custom related changes as well for regulations. If you really break down um, what you see, let's talk about these final questions. Um, is this change of code finalized, or you think it's a dynamic code which government is might be they leash these changes like this to the market, and they might collect the feedback from the companies, local, foreign, and they might based on the feedback, maybe 1 year, 2 years, they might change again, adjust according to the market demands. How you see this? Is there will be more changes or more letter of clarification coming later this year?
So yes, I agree with you that tax code is not final.
Mhm.
The It leaves a big room for discussion,
Mm.
and we believe that there will be a lot of changes to
Mhm.
this new tax code.
Mhm.
So the first part of these changes we're expecting at April
Mhm.
this year.
Mhm. April
After
this year.
after first quarter, after 3 months,
Oh,
tax
very
authorities
soon.
introduce that we
Mm.
they will they announce that there will be some changes.
Mhm.
So also our president announced that tax code, it's first interaction of new tax code,
Mhm.
and uh,
Mm.
it's not something crucial, and we
Mm.
could change it if business need it.
Mm.
So we are expecting a lot of changes to this new tax code.
Again,
Again,
in April, looking
the
forward.
first part of changes where we were expecting at April, right?
That's very interesting to know, right? So, go back to our first topic then. Our corporate clients, our audience in business owners need to be really prepared for constant changes with fundamentally to have a very healthy operation, and don't underestimate the importance of tax in your business daily operations planning, cash flow management, book management. And it's important that we as consultants also constantly pre-educate and prepare our clients. So actually this year KPMG Kazakhstan is officially celebrating its 30 years
Right.
anniversary. So this is also a big in February. It's a big milestone, and we see more and more foreign investors, a lot from China, a lot
Especially from China.
China. That's why we have China Desk
Yeah.
established. I'm very honored to lead this sector, and so far it has been successful because of our support from expertise. What you see so far for foreign investors, what could be the benefits? What kind of service they should use from us? For instance, this is a bit the advertisement part, but I want our audience to understand what we can really do for them, of new investors coming to Kazakhstan. Let's say a mining sector from China. What kind of service? What we can really do for them? You think they can acquire our bookkeeping, they can acquire our tax review, they can also review what can be exactly the service package we can provide for them, you think?
So I think we could support investors at all stages. So first of all, when they're entering in Kazakhstan market, so we can assist them with from tax perspective. We could provide them outsource services. It's bookkeeping, tax outsource services. We could support with all tax and tax related questions they have at each stage of entering our market. So we could be as this additional point of control from tax perspective to providing some review of tax liabilities on annual basis to that the management to be sure that they have no troubles, no problems with taxes. So we could support our clients at all tax related questions. So
Right.
if foreign tax investor dealing with KPMG, so I'm sure that all tax issues will be resolved.
Right. We could be their really external arm and muscle to protect them from any tax risk and mitigate and project the future tax exposure. And plus, we have China Desk to support for the language barrier and project management.
Yeah.
So that's all. I think we had a very good talk. Thank you very much, Alvan, to open this very first episode for us.
Thank you.
We
Thank
hope
you,
in the
Mary.
future we can invite our other colleagues for customer related topics, for transferring price related, maybe also subsoil related. We could really nail down and to provide more detailed intelligence. That's all for today. Thank you very much.
Thank you, Mary. It was a pleasure to be here
Great
in your
episode.
first episode.
Thank you.